How are we all doing? How's everybody? Happy Tuesday. We'll start off with the news this morning. Blimey. Already banked 1,100 quid this morning. Thank you very much. Not bad, is it? So, how is everybody? Morning, Christian, Ian, Leshy, Kennelly, Amy, Stevie, JC, Virginia, Layson, Ron, Baggy, Gregors, Mark, Dion, and morning. So Aussie dollar news overnight. Morning, Mark. Came out as expected. We've got at 8 o'clock this morning. We've got the Swiss franc foreign currency reserves. Don't think it's going to do much this morning, but you never know. But yeah, main news was the Aussie dollar rate increase. Market wasn't happy with the rate increase. The Aussies are very, very far behind everybody else with their interest rates. So the fact that they've increased them to 4.35 is like, well done. When you're ready to catch up with the rest of the world, let us know, basically. So market has never been impressed with the Australians' approach to interest rates. They're miles behind on inflation still. Their unemployment is high. You know, it's this has got a lot more room to go up, and they're just not doing it. So the market frowned upon it overnight. So just change the order of my terminals. There we go. So all the Aussie pairs coming down fairly hard. I've already banked quite a bit this morning. What's the time? 54. So I'll quickly go through these that I've banked, but I'm going to bank some more in a sec as well. So that's your only news today. There's no other news really until tomorrow now. We've got the New Zealand inflation expectations report coming out in the morning, and then we've got 2 talking heads tomorrow. So no news really. Excuse me. It's very quiet this week for news. Overnight, not an awful lot either. If you whiz through, we had the cash rate coming out there yesterday morning. Other than that, no other news. So very quiet overnight on the news front as well. So nothing exciting. This is going to be the dullest week in the world ever. So banked today so far, Aussie dollar, US dollar. So that was nice, quick in and out on the H1 RSI extension. Propulsion gap was my target. Banked euro odd. That was a straight in, straight out. That low there was my target. So that was a nice 3 or 4 day move. New Zealand dollar, US dollar. Out of that. That was nice in and out. Propulsion gap target. And Aussie, New Zealand. That was when I exited yesterday. So I got out of that one yesterday just in case we pumped. We didn't. So that's fine. I will add that back on if we get up there, but I don't think we will. So that's what I've banked so far. I've got a load more to bank here as well. So pound US dollar, going to get out of that. That's very close to target. It's 0.5%. Might as well just bank that. Stick it in the bank. New Zealand dollar Swiss on its way down. Might leave that one on for the minute. US dollar CAD. Going to bank that one. US dollar CAD, basically, we've got this accumulation here, which potentially, now we've got that gap fill done, could act as a resistance and push back down. What I don't really want to do is just get stuck in it for a few days. So I'm going to get out of the US dollar CAD as well. Might as well. It's very close to target anyway. Euro New Zealand. That's ADR at a double top. Right, so this Euro New Zealand, this is a tricky one. So I'm hedged on this, stupidly, because we got in, I scaled out of those positions basically, and we got extended on the RSI to the upside. So basically what I'm going to do is I'm going to exit the long. So I've gone long from there, and I'm short on those three. So my average short is there. My long obviously is there. So I'm going to exit this long at that double top. What I'm hoping for is we come up into this area, and this structure break to the downside basically carries on going like that. So I'm exiting the long. So there we go, 2.4% banked. So main problem I've got 2 minutes to the open, is oil. This is not going well. So I'm going to go for an aggressive position on oil today. And then I'm going to decide what to do with this, because this oil is just not rallying. We're not getting the move on it. So we'll have a look at that in a minute. But let's have a quick look at the DAX first. So we're gap down today on the DAX. We are due basically a drop. So we're due a pullback on this move. There's a nice area there potentially for the bounce. We've got this massive gap to do. So an ADR hit to the downside is on the cards today. Upside, obviously, first target will be gap fill. So somewhere in that area there to the upside, if we break long, I'd be looking for a gap fill play there. Not sure that'll be 2R, but we'll see. If we're going to go upside and run, we're looking at yesterday's high, previous day's high, which is Friday's high, which is last week's high, basically. So 100 to 125 ADR to the upside if we break through the gap. Downside, we'll be looking for an ADR hit to the downside to come down into that accumulation. So loads of room. Oh, what am I doing? Where's my terminal? That one. So they're the wrong way around. Right, so there we go. So there's DAX. Yesterday, pretty good day. Banked 1.35%. Could have banked more yesterday, but didn't. Had a hedge yesterday, which didn't work very well. Right, so there we go. So pre-market range, 5, 10, 15, 20, 25-minute pre-market range is within the area. So looks like we're breaking short. We've gone short fairly quickly as well. So downside target. Tricky if we're going to break short. I hate leaving gaps. I hate leaving gaps behind. We've got a gap fill to the downside here, which hasn't completed. So there's your 5R target to the downside. Don't think I'll hit that, but anyway, I'm just going to move my TP up to 4 and a bit R. So yeah, downside, basically, we got this little accumulation before we rallied on Thursday last week. To the downside, that is basically where we started a bull move. So I'll be looking for that to be an addition point, but there's a gap fill just below it. So very tricky downside today. Obviously, this is quite a big move. So the pullback could really go anywhere in the DAX today if it drops. But I get the feeling we probably want to go long today and get that gap done straight away, which is annoying because we've triggered short. Might get hedged on this one today. We'll see where we go. See what happens. Morning, everybody else. Haven't said hello to Evans, James, John, Outro. How are we all doing? Right. Outbreak even on the DAX. Hasn't gone anywhere yet. How can you be break even on it? Hasn't moved. And he just literally popped its head out the lows. It's a little bit of an aggressive break even. You're going to find it very difficult to make money if you go to break even that fast. You're just going to get taken out on a normal candle, aren't you? Pre-5-minute ORB. Oh, right. Okay. Oh, you're very brave. This is a tricky one today. If we do get hedged on this today, it's going to be quite tricky because you kind of want to look at getting out there but that's not a lot of movement. Hope we break short. We'll come back to that in a minute because, again, not a massive amount of volume today. So we'll see where we go. Right. ADRs. There's a few ADRs to look at. Obviously, as you imagine, they're all Australian because we had the Aussie news. So basically everything that is ADR is Australian dollar. This move from the Aussies up to 4.35 is an expected interest rate rise. In a normal world, when you get an as expected news event and it is positive for the currency, you typically get a normal positive move. At the moment, as we've witnessed a number of times now, especially with the euro, we've had multiple interest rate rises and currencies dropping on that positive news. So positive interest rates are positive for currencies. They attract investment, they attract money into the currency, but everything is hitting terminal rate now. So we're getting to the point where it doesn't really matter what this number is. There is not really much positive you can read into it because the only way is down for everything on interest rates at the moment. Expectedly, whether it happens or not, we don't know. We'll have to wait and see what happens with inflation. But so again, Australian dollar, next one to fall victim to a positive interest rate rise and a negative currency move this morning. So we'll see where we go for the rest of the day. It's not fundamentally bad for the Aussie. So this move that we're seeing coming in this morning on the Australian pairs isn't necessarily going to be continued. It's a knee-jerk reaction. The market is just using it in most cases, it looks like, just to do profit take moves. So there is potential that it could carry on going back the opposite direction because it is a positive move, putting your interest rates up. However, if it is the terminal rate and they are going to give some guidance as to we're not going to go very much further, then there's no bullishness or bearishness. It's just what it is. It's just a higher interest rate and they're just falling in line with the rest of the world, basically. So everybody else is now on pause mode. Everybody's inflation is coming down. So we're looking for that to be the pause, which is why I think we've had that reaction this morning to it. So it could have gone either way today. It's impossible to tell with interest rates when you get to these sorts of levels. We're at the top of the oscillation. So we'll see where we go. But so these are all potentially ADR reversal opportunities that you could take. But bear in mind, you are really swimming against the tide with these. These moves have been caused by a news event, and it could be accumulation, continuation type move, and you leave big old propulsion gaps in play for a bit. So up to you if you want to take them today. Just be a bit careful with them. Going to get hedged on the DAX today. This market at the moment is an absolute nightmare. For the last couple of days, it's been like pulling teeth trying to make money because it's either no volume, not going anywhere, taking hours to actually just get 1R, or it's directionless. It seems to be like that at the moment. The US session yesterday was the worst session I've seen for a long time. Look at this, the movement we had on the US yesterday. In total, we did 25 points on a 60-point ADR. So we did less than half of an average daily range yesterday of movement. It was awful across the board. All US indices, they just didn't move. You literally had one opportunity to make money on that drop. That was it. If you didn't take that, you lost it yesterday. It's awful. So markets are really starting to contract at the moment, coming out the back of earnings fortnight. They've done their money and getting a bit more risky at the minute. But what do you think, but so we'll see where we go. But this looks like it's rejecting the lows. This is the most logical trade today, getting that gap fill done. So if you're taking the 5-minute opening range, you are long, but this could go either way. So we'll see where we go. So yeah, looking at these then, Aussie dollar CAD. So there's an ADR hit to the downside. So there's your ADR, which we have hit. You probably got a reversal alert on this morning. Look. There's ADR. Touch and go whether you would have got an alert this morning. You've had one there, obviously, anyway. So there's your reverse alert. That's your potential W. And there would be your target. Aussie dollar Swiss. Same thing. ADR hit to the downside. Your reverse alert hasn't gone in on that one yet. The reverse alert's going to be there. You would have had one there, actually. That would have been a reversal alert, but it's been invalidated straight away. 125 ADR. So again, target up into propulsion. So look for it to move back into the area the sell started. If they are going to continue the move, they're going to add into the position there. If this is just a knee-jerk reaction and a profit take, we'll get a V-shaped recovery on it. So it'll go one way or the other. Hedged on the DAX. Aussie dollar yen. So that one's hit ADR, W pattern going in again. These are all starting to run out of steam. Aussie dollar, New Zealand dollar. Again, same thing on that one. W pattern is already in. That one's gone a little bit further. Aussie US. Not got a reverse. Oh, yeah, no, you have. Yeah. So you would have had one there as well. So a lot of these moves, basically, you would have had the initial reverse alert. If you're using the market reverse alert CA and the ADR set file or an ADR set file, you would have had an initial entry on these today. We've just invalidated those lows. So it's two types of W pattern. There's a higher low W and a lower low W, which is kind of your stop run W. So that one's gone in already. Euro odd, obviously that will be to the upside. So there's your reversal alert just gone in. I've just taken another short on that reversal alert. Look. So hoping we're coming back down there. ADR is my basically average on the Euro odd to the shorts. So that's 150 ADR. So that's your most extended one today so far. That's basically potentially a pullback on that leg. So we got high, low, lower high. We kind of put in a symmetrical triangle break in the middle of it. Low, lower high, looking for a lower low. And pound odd. So that one's extended almost to 150 ADR, 5-minute reversal alert. Already gone in there. There's your W, M even, upside down. Morning day trader FX. So yeah, so lots of ADR reversal opportunities there. Whether they play out or not, we'll have to wait and see. But I'm not convinced by this Aussie move, really. I think this is probably just a knee-jerk reaction and a profit take move, basically, on a lot of these Aussie moves that we've already had. So with all the Aussies, if you look at them on higher time frames, we've had a lovely big run. So this looks like just them taking profit, using the news to take profit on the move. And then basically, once they've done that profit take move, which will either be a 50% retracement, 38 or 61, will potentially carry on with a new leg to the upside. So just watching these to see if we get any further today. That one's close to getting out as well. Why's my TP there? That's a bit close, isn't it? That's because I had that additional position on, didn't I? Which I took off yesterday. So I need to adjust these TPs. Where should we put this one? Go for that propulsion gap down there. That's not going to get hit today. It's 225 ADR. Well, you never know. Might do, but unlikely. Right, so there's your ADRs. RSIs. The only thing we've got extended now on the 4-hour is the Euro Yen. Everything else has come out of extension. So that's the only one that's still extended now. All the others we looked at yesterday and over the last couple of days are all starting to play out. Gap fill's not done on the DAX yet, no. It's all the way up there. So just under 2R basically is your gap fill. So this is a tricky one today, the DAX. You've got a couple of options. Obviously, there is potential for this to gap fill and then reverse and then drop. So you could get out of the position here. So one of the plays you can do on this, obviously, if you're running it on a full auto mode, it's just going to run you up to 5R, which is fine, and it'll run you down to 5R. So if it doesn't hit one of those levels, you're hedged and you're just going to take the loss on it. If you're going to intervene, a 2R gap fill, taking off the long there and hoping that we get a bounce out of the gap, which quite often will happen, a la that, yeah, is definitely on the cards. Now, we've got this gap fill to the downside as a target, which is absolutely miles away. Obviously, we're not going to hit that today because it would need to go something like 3 or 4 ADR, which is not going to happen. We've got this little gap fill to the downside at 5R as well. So we've got an upside gap potential fill and a downside gap potential fill, both with an ADR today. So if we push up and fill that gap, you can get out there and then see if price drops. Now, I wouldn't take an aggressive on this. So what I would do, the way that I would exit this, and I might do this, we'll see what happens. I'm going to see what price action is when we get there. But the way that I would exit this is get out here with the first position long, or both longs rather. So take the longs off there and then wait and see if price reverses. If price reverses, you've then got the option of getting out of your shorts at a break even and go, that didn't work this morning. Or you can hope that we get a drop and take the profit on the short move as well. If it hits this level, pulls back a little bit and then decides to drive, I would probably re-hedge it there and lock in a second loss. So I would up the hedge loss to 2K and then try and ride it higher. So we've got yesterday's high, which is up at ADR, that propulsion gap out of the weekly move from Friday as well. So this area here, I suspect if we do break that high, we could sort of start a run up to there. But you've got an accumulation here in your way. It's got to get through, which is a previous support turn resistance. So there's a very strong support resistance zone at 4R. You've got this area of accumulation, obviously, where they sat and sold out of. There could be many sellers in there from yesterday still looking to add. So it's a tricky one today to the upside. So we'll wait and see where it goes, and we'll watch price action when we get there. But there's a number of different plays we can do this morning. But because that is quite a tiny little accumulation at the end there, taking the short off once the gap fill, long off once the gap fill's done, and then waiting for some bearish price action. I'm going to wait for some bearish price action to take the short off. I'm not just going to take it off because it hits it. Wait for some sellers to come in. That is a tiny little re-hedge. So just re-hedging manually at that level will just lock in that loss rather than just going into massive drawdown on that short. So it's too close. It's too dangerous. Well, it's not too dangerous. It's just dangerous getting out this close. We know price can move an ADR. So if you exit your long position there, that is your potential drawdown you're going to get on that short, which is massive. So you don't want to deal with that. But we'll see. We've got to get there first. See where we go. Right, so that's your H4 RSI. The hourly RSIs, they're all the same basically as your ADRs pretty much. So Aussie dollar CAD, Aussie dollar Swiss, Aussie dollar yen, Aussie dollar US, Euro odd, pound odd. Yeah. So these are the ADRs we've looked at. Yeah. So we draw a little box. Flick back to the ADR dash. Yeah. It's the same stuff. Yeah. Which is why I say don't trade all of the strategies that I teach in the bootcamp. Yeah. Pick one. Use ADR reversals, H1M5 or H4M15 or H4M5, whichever you want to do. You're going to take pretty much the same trades because an extension is an extension. When you get extended on ADR, you're likely going to get extended on RSI at the same time. Yeah. So those RSIs, we've looked at all of those already. They're all good opportunities to get in on hourly RSI extensions. So the question is this a pullback long or not? We don't know. So we'll see what happens on that. Making a run for the gap on the DAX, not quite there yet. So when you look at the pullbacks on moves, you're looking at sort of fib levels to give you some kind of clue as to roughly where we might pull back to. 38 retracement is kind of a shallow pullback. 50 is a medium-sized pullback, and 61.8, 71.9 would be your sort of deeper pullbacks. So anywhere between that high there and that low there, so that resistance turned support, that resistance turned accumulation. Those are the areas that I would look at for bounces today. So 61.8, 71.9 is way beyond 225 ADR. So it's going to take a lot of movement to get down to there today. But this one here at the 38 level is 150 ADR, a nice propulsion gap. So potentially that could be your bounce point today. So if you're going to get into this, it's nicely extended at the moment. You've just had a reversal alert on the 5 minute, which has got invalidated. Or did you get one on this one? No, you didn't get one on this one. Yeah, you haven't had an alert yet. So that will be your first alert, basically. But it's not quite got down to levels I would expect to bounce at yet. So yeah, they're all extended. Same thing with all of them, basically. It's an H1 RSI extension to the downside. So potentially this is going to be a bounce point, but we don't know whether they're going to continue a long move or whether they're going to just do a A-shaped recovery in this case on most of these. The only other thing you've got is US dollar yen. That is extended now back to the upside. We know our friend, the US dollar yen, has been an absolute nightmare. Really have no idea what this thing's doing now. We do know that the volatility's picked up dramatically. So just starting to get extended to the upside. I'm staying out of the yen at the minute. If we get up to these sorts of levels, then I will start looking again at shorts. But at the moment, this thing's got the potential just to flip-flop and muck about. Yeah, there's no strength and no weakness in the US dollar. There's no strength and no weakness in the yen at the moment. So it's very difficult to pick a trade on this. Resistance basically is all I'm interested in shorting it. Gap fills down on the DAX. So there you go. There's your RSIs. So there's not much else to look at today. It's all ADRs on the Aussie dollar. Okay, so gap fill done on the DAX, pretty much. Let's draw it in properly. Okay. Actually, we should put it in as an area, shouldn't we? Let's put it in as an area. God. I can't draw this morning. I'm having one of those mornings where I'm just incapable of operating in any shape or form. Right. There's a gap fill. So, choices are get out now. If we get some bearish price action coming through, and then try and get out of the shorts. So what you're looking for on an exit to get to break even is if you take off your profit here. Yeah. If we pull back from where you take your profit off by the same distance as your hedge, which is that size for me, i.e. I've got to get back down to here pretty much, that gives me a break even. So I can walk away with no loss. So going to be banking roughly 900. So basically banking the amount of hedge basically. So I'm banking about $900. So I'd need a pullback of $900 basically. But I'm going to watch price action here. Obviously the danger is we just blow straight through this level. If we blow straight through this level, the gap fill isn't where they're shorting from, is it? So we will see where we go. If you took the 5 minute today, well done. You are pretty much at probably 1.5 R. Yeah, 1.5 R long on the 5 minute opening range break. So we'll watch the price action here and see where we go. Morning Yotco, morning Oliver. Outro 3R locked in on the DAX. Good job. You are a millionaire. No, I'm not. Wish I was. Be nice. I wouldn't be doing this if I was a millionaire. I'd be replacing my water bottle for a Mai Tai on a beach somewhere. So, what lot size was 17? So, for obviously this play basically out of here, if we get some bearish price action coming in here, I will probably exit the shorts, but I'm going to re-hedge. So re-hedge will basically be placing buy orders above this high. And if we break that level, I'll re-hedge the position, which will lock in more loss, basically. And then I'll look for an area at the upside to get out. But it's a tricky one. There's lots and lots of places to get out to the upside today. Not easy. US indices also rallying at the moment. We're just approaching the pre-market high on the Dow. NASDAQ, S&P's up at the highs as well. Well, not at the highs, but at a high. Got a little gap fill play to the upside on the US indices as well. Okay, bearish price action coming in. Got 1 minute left on this candle. Oil's gone below 80. Yeah, I'm going to look at oil in a sec. When is had to close the sells, or how long you hold in DAX? Don't know what you mean, Oliver. When is had to close the sells? Right. So, is this the high? That's the question. When? I don't know. I don't know what you mean. Sorry. You'll have to clarify the question. I don't know when you need to close the sales. I don't know what your position is. I can't really answer that one. Are you meaning if you get out of your longs here? Is that what you're saying? If you're hedged and you get out your longs here, where do you close the sales? Wherever you want. Close them whenever you're happy with that amount of money that sits in that net profit, yeah? I'm just watching the US indices for some kind of clues as well. There are 4 orders, sell and buy, yeah. So your hedges, you've got 2 long orders, 2 short orders, yeah? So if you close your long orders here, you've only got shorts on. So to get out of your shorts, you need to close them at some point. I don't really understand what you're asking, Oliver. Sorry. Basically, these will be in drawdown, yeah? When you are happy with the amount of money in drawdown these are, or profit, you close them. I don't really understand what the question is you're asking. Sorry. I'm confused.com. Net worth has got to be more than $1 million? Maybe. Outro's out. Morning, Wilma. That was the answer. All right, okay. So basically, when you're in a hedge, basically, the purpose of hedging is to buy you time to analyze the market and have a look at what the hell's going on, right? I don't know what to do with this today. I really don't. So basically, you're buying yourself time. you basically, when you lock in a hedge, you're locking in a loss. Yeah, I'm guaranteed to lose right now $940. That's what's happening right now. If I do nothing, I'm losing $940. That's it. I'm calling it on the longs. Or am I? Yes, I am. I'm out of longs. Taking a small profit for $400. So right now, I am $344 banked, and I'm in $896 of drawdown. Yeah, overall. Because my current drawdown is $1,234. So that minus that is my net profit. When my net profit gets to zero, I can close all of this out now and I'm done. That's it. Brilliant. So I've gone, I'm going to trade the DAX this morning. Oh, crap. It didn't work. I'll get out at a zero and walk away and go, that was a bad session. That's what my goal is. What I would love to happen is for this to put a whacking great big bearish candle in like that, put another whacking great big bearish candle in like that, and then put another great big whacking great big bearish candle in like that, go below my sell so I can close out that at a profit and bank a nice win for the day. I have no idea what's going to happen. But my options right now are, it's going my way, fantastic. So my plan of the gap fill short is working. If it works, brilliant. If it doesn't, I've got options. I can re-hedge it somewhere and go long again. Or not. There's no answer to when do you get out. You get out when you're comfortable. Right now, I could get out with $450 and go, that was a crap morning, and walk away. I'm running the risk now of going into a massive big drawdown if I'm wrong on this gap fill play. If I'm right on it, I can make some money. I don't know the answer. No one ever does, do they? Thanks for subscribing, Trimon. Welcome aboard. But I think I've answered the question anyway, because you said that was the answer. Thanks. So I'm just waffling. I'm feeling. All the US indices are coming down. So NASDAQ's had a bit of a sell-off at the highs. S&P, same. Dow, same. So all indices, this looks like sector purchasing this morning because all indexes are in sync. So they're buying stock sectors by the looks of things. So we'll see who's in charge today, whether the DAX is the main leader or whether the US indices are as well. 91 watching, 17 likes. Come on, people, show some support. Thank you, outro. Thumbs up. Helps the stream somehow. I don't know how because I don't know anything about YouTube, but anyway. You can tell when somebody earns their money out of YouTube because they're constantly going, hit the subscribe, hit the like, hit the thumbs up. Come on, help me, help me, help me. Whereas I just sit here and don't say anything because I don't care. Right, so danger we've got here is obviously we've started with a long break. So all we've seen there is a profit take on the initial move, and now we're going to put in a new leg long. So that's my options now. I'm watching my P&L go into drawdown, so I need to pick a point to hedge it again. So we will see what happens. But if it breaks, basically, so we've got an inside bar forming at the moment. If we break that high, looks like I made completely the wrong choice, and we're going to run up to ADR, in which case I'm going to be in trouble. So I'm going to need to lock in another hedge on it. So watching that high basically as my point of no return, but that will be roughly $2,000 something because it's going to be twice my hedge because I've got one hedge in there, which was locked in, and now I've taken that off. I've got that much money to take off of the second hedge, and my second hedge will be from there to wherever I re-hedge it. Jesus, that was the worst mistake of my life today. Mind you, I haven't made many mistakes today, have I? Because I've just banked 2% or something over here. So that's the worst mistake I've made so far today. Not yet. So I'm going to re-hedge up there. Going to be a loser today. I can feel it. I basically haven't had a losing day for over 2 weeks. I'm due one. So I'm happy to take this one on the chin if it happens. But price action, as we know over the last couple of days, has been erratic to say the least, hasn't it? I've been watching many traders get chopped to pieces. So I'm pretty chuffed with my P&L being that green, considering the market's in an absolute suicide mode at the moment. But anyway, got a new high just gone in on the NASDAQ. The Dow is still an inside bar. S&P is just putting a new high as well. So the US market's rallying. While we're waiting for that to decide what it's doing, oil. So basically, my oil trade isn't working. So I was looking for a new leg up. Need to go to the 4-hour chart. This low here, somewhere around there, is basically where we're coming down to, which is basically ADR today. So what I'm doing at the moment, I'm holding these 4 positions long. So I was looking for, obviously, a continuation move to the upside. We haven't got it. What we've actually got is a market structure shift back down. So I can't figure it out. From a fundamental perspective, there's zero reason oil should be dropping at all. We've got supply restrictions in place by OPEC, demand increasing in China, and a war kicking off. There is nothing more beautiful for oil than those 3 things in combination. Oil prices go through the roof. That's what happened last time. I've no idea why the market is dropping. It just is. We're not getting any traction for some reason. So it's all going wrong on oil. So it's in jeopardy at the moment of screwing my month up. I'm not going to trade it anymore. This is going to be my last month trading oil, basically. So I'm in 5% of drawdown on this at the moment. I've either got to hedge it and lock this in because I've no idea why this is dropping. It's completely against fundamentals. But what I'm going to do first of all this morning is try an aggressive drawdown control position on it. So where I think we're going today is ADR. Somewhere around ADR, which we're not far away from. So I'm going to let this drop and I'm going to trail basically a pending order because the EA is not running this. I'm running this manually. So I'm going to trail a pending order above the hourly highs. So I'm just going to move that down a bit more, which is basically 50% of my position size on oil. So I've got 1.4 lots long. So I'm putting a 0.7 long on. The idea of this trade is to get the average down because my average is now unreachable. My average is now over 225 ADR. So this is in danger of basically blowing it. Not blowing the account, but blowing the month to pieces, isn't it? So I've got that trailing. So I just want to see what the NASDAQ's DAX is doing. We haven't broken the highs on the DAX yet. We have put in a bullish engulfing though. So basically, that's the plan with oil. I'm going to take the next bullish engulfing long, which would be a reverse alert on the 15-minute time frame. Yeah, and basically just see if I can get this average down and exit with a break even because I've banked loads on it. So, you know, there's multiple profitable trades on it. So it's paid me quite nicely, but it's in danger of not just wiping those profits out, but wiping a load of other profits out as well. So I'm going to give it basically down to ADR today, and then I'm going to get an aggressive position on. If that aggressive position fails, I'm just going to start cutting it. I've got to because it's not working. And because I don't position trade oil, I've no idea what this is going to do. It stung me in the past. I started trading this last year for the first time. It was going really, really well until it basically took back pretty much all the profit and more on that move. It's prone, as gold is, to these ridiculously big, fast moves. Within a week, you are basically, within a week, you've undone a month's worth of movement for no reason. So that's what I'm wary of. I'm wary of this move being back down to here, yeah, down to $70 a barrel with an oil embargo on Russia and a war kicking off. Yeah, it doesn't. That's not how fundamentals work. That's not how the rules of supply and demand work. So something else is going on here. Something fundamentally wrong, isn't there? So that's my position on this at the moment, because it's just not playing out. The longs are not playing out. If we get an escalation in the Middle East for any reason, if the US suddenly gets attacked by one of the other Middle Eastern countries, or if the US has to get involved, or something happens to escalate, we should see a massive rise in oil prices. We should be seeing exactly what we got there, a gap and run. Yeah. We are getting an escalation, but it's not escalating fast enough. Or I don't know, something's just not right, is it? It's not working at the minute, oil. So we've broken those lows, which was my get out of jail card, basically. So I've lost that. So that's the plan on oil. And it's going to be one of those I'm going to have to cut. I'm going to get out of it, basically, and not position trade it anymore. So it's one of those instruments like oil, like gold rather, that is prone to erratic movement. This is the reason I don't position trade gold. FX markets, you have two things, pushing and pulling. With gold, you have gold, and with oil, you have oil. Yeah, they're commodities. Although it's pretty much a cross with the US dollar, because of obviously it being both of those being priced in the US dollar. They are supply demand driven products, whereas FX is driven by greed. It's driven by fundamentals and driven by bank movement. So it's manipulated, whereas oil isn't manipulated. Gold isn't manipulated anywhere near as much. So I'm going to strike it off the list and not play with it anymore after this, because it's again stuffed me twice. So it looks really good every time I get into it, and it's like, yeah, this is doing what it says on the tin, and then all of a sudden it stops doing what it says on the tin, i.e. moving up when you've got supply demand issues. Doesn't work out, does it? So watching this level, I'm just going to adjust this up to there. Just going to move that one down to there. Get rid of that. So so this area here is basically where I'm looking for reaction today. So 100 ADR-ish. And as soon as I've got that long triggered, I'll then look at the low. The stop loss will go under the low for the aggressive drawdown control position. And then if that triggers, that will trigger me to, I'll do a partial scale out of two of the positions to bring the average down, and then I'll try and exit the other two. But yeah, oil's just not playing ball at the moment. Just can't get any traction. So the entire week, so all we had was last week we opened there and closed down there, but 90% of the week was spent doing nothing. Exactly the same as the previous week. We opened there, we closed there. 90% of the week we spent doing nothing. Whereas previously we'd had nice bullish market structure and we were expecting a run on 95 a barrel. So these 2 weeks, last 2 weeks basically, we're now 1 month into it kicking off. So that's when Hamas invaded. That's where we were expecting the oil rally to start. What we've actually got is 2 weeks of complete indecision. The trade is invalid basically now. And I don't want it to ruin my month. So going to do something about it. New Zealand dollar Swiss stalling out. It's a bit of a shallow exit, but shall I bank that as well? I might go for a run on New Zealand Swiss, you know. I'm just going to protect that one with a break-even stop and see if I can get a nice little run. See if we can get, because that hasn't hit ADR yet today, that one. There we go. Thanks for subscribing, Anin. Welcome aboard. See, look, somebody says give the thumbs up and everybody subscribes, which is brilliant. That's what we like to hear. Does go to show, isn't it? If you actually say it, people do it. So if I tell you to do things, you will do them. Hit the subscribe and like button, everybody. Look into my eyes, not around my eyes. Look into my eyes. Didn't some traders at the banks get jailed for manipulating gold? Yeah. They manipulate everything. It's just what happens in banks. That's their job, to manipulate stuff. So second sell, aggressive on. As you can see now, I'm $191 in drawdown. So if I can get down to there, I've got a break-even exit. But I like the look of this market structure now. We are now looking bearish. If we can get down to there. You know what we need? We need this secret bank strategy. If anybody's new in here and you're not familiar with this strategy, I revealed it for the first time on YouTube. So if you want to know how to do this strategy, it's very technical. But if you want to know how to do this strategy, it's here, my secret trading strategy. Okay. So go and watch this video. Put it in there. Go to the beginning. I hate it when it does this time thing. So yeah, if you want to know how to do this strategy, there you go. Go and watch this. But don't tell anybody. We don't want it getting out there too much. We don't need a rocket today, do we? There you go, sir. That would be bad. But yeah, basically everything is manipulated. And the bank's job basically is to manipulate price. That's why they have market maker desks. Their purpose is to make a market. And the way you make a market is by supplying liquidity. So within the banks, they have the power to move every candlestick up or down on their whim, because the market moves on basically buy and sell volume. So if you have more volume available to you to buy than everybody else does, the candlestick will go up. As banks have not unlimited, but virtually unlimited supplies of cash, the market maker desk's job is to provide liquidity for the sellers. So if as a bank or institution, you want price to come down, you will provide a load of buy orders so that the sellers can execute those and price will come down. If as a market maker desk, you want price to go up, you will limit the supply of buy orders that you're willing to put out there, which makes sellers harder to move down, because if there's no buy orders available, you can't move the price down. So the market maker's job is to provide liquidity to the market and therefore manipulate price up and down. You've then got multiple other desks like the commercial desk, the speculative desk, the prop desks, etc. in there, which have all got different purposes, but they all have the power to move the market. And big central banks make this thing go up and down, which is why you see a lot of algorithmic movement, because it is just algorithms providing that liquidity. There's nobody sitting on market maker desks now with a button going, we need to add some sell orders, guys. Yeah, it's all done by algorithms. So every instrument is manipulatable. However, when you've got something which is a commodity, that is harder to manipulate, because if a war kicks off, people will liquidate stocks and buy gold. Therefore, it doesn't matter whether you're a bank and you can hit that button as much as you like. The volume and the flow of orders is going that way. It's going that way. You are getting run over. So banks tend to go with the flow. So that's why commodity and instruments are more difficult to trade, because they will suddenly flow on fundamentals, but they don't always do what the fundamentals say they should do. FX markets are basically there particularly to manipulate price to make profit. So the speculative desks in banks use the FX markets to make money. So if I've got 25 million on my desk available to me, and I know that the market makers are going to drive short today, or there's a large commercial order coming in to drive an index, a currency pair in one direction, I can jump on board that order with my 25 mil and turn it into 25.5. Yeah. So I'm making $500,000. I'm taking a 5% cut of that as my commission. Thank you very much. So these things are much more manipulated. The FX, not this is the DAX, but the FX markets are much more manipulated than commodities. And they use the fundamentals to make those moves happen, which is why I said this morning on the Australian dollar, the fact the Aussie dollar has come down because it's put its interest rate up is counter what we would normally expect a currency to do. But as they've been driving it for over a week in one direction, what are they? Long. How do they make money? Exiting those longs. What is the exit of a long? A short. So why has it come down this morning? Because they got a load of money they need to take off the market, and everybody's going, quick, get on the Australian dollar. So they're taking everybody's liquidity by driving it in the opposite direction. This isn't working today. This is going to turn into a big loss if I'm not careful, so I'm going to have to re-hedge this again, potentially, and lock in a nasty old loss today. Nasty today. US markets rallying. NASDAQ's making new highs. The Dow's still stuck, but the NASDAQ and the S&P are new high on the day. And S&P. Dow Jones is still working alongside the DAX at the minute. So basically, if we break that high, I'm going to re-hedge and just going to lock in 2.5K loss today. I'll take my weight off because it's not working this morning. Thanks for subscribing, Dreo. Welcome aboard. Emperor George, this gap fill play worked out for me today. Got out of the hedge. Good job. I could have got out with $190 loss, but I didn't. But it's not finished yet. We will see. DAX is in a triangle pattern. Sort of, yeah. I mean, it is a bit of an odd triangle. You kind of need to take that wick out of the equation. But yeah, I mean, we are contracting. So there's no propulsion gaps. So this is algorithmic again today. You can tell it's algorithmic because of the size of the candlesticks and what it's doing. So basically, when you get like Christmas trees, big bear, big bull, big bear, big bull, big bear, big bull. That's algorithms basically working a range. Just buying it, selling it, buying it, selling it, making money because that's what they do. Yeah. So when you get these big moves like this, it's basically just the market making money. When you get symmetrical triangles, it's the market contracting. So the market is basically not able to get as far as it did before to find sell orders. So deciding to exit the positions, not getting as far as it could before to find buy orders, exiting the positions, contracting until basically it's unable to make money. So then one of the speculative desks will make a move. And then you start, hopefully, a trend. Or you just stay in rotation all day and do something like that. Don't forget, today's a no news day. Again, we've got no news again today. There's nothing to move the markets today. We're out of earnings fortnight. It's just a minute. Evans, my broker did me dirty at midnight. Never leave a profit of less than 30 pips running overnight. He charged me swap too. Yeah. He's not done the dirty on you. He's done business. You asked him to hold your position overnight. He said, no problem at all. We'll take out a loan on your behalf and you will pay us the interest on that loan to hold that position overnight because it costs us a lot of money and it's dangerous. He's just done what you asked him to do. Read your contract. You've asked him to do that. You wrote down on a piece of paper, please, every night, charge me money for holding my trades. Signed, Evans. So he's done that. You asked him to. Morning, David. You haven't got a choice, but that's what you asked him to do. So he's done it. Best job in the world, brokerages. Just a non-stop way of making money. Every time you press the button, they make money. Every time you hold a position, they make money. Every time you do anything, if you look at a chart, they make money. They just make money. It's their job. We've got 2 minutes left on this candle. So we are still just about holding. But this initial move this morning basically has been bought now twice down here. So not seeing a lot of interest in any direction after this move today. So basically that was your move. There's no interest at the moment to do anything at the minute. So if we break to the upside, obviously I'm going to lock in about 2.5% loss. So there's not really a lot of upside targets I can see today that make any sense apart from this level here. So that is an obvious sell area. So it's this high, this low, basically. Yeah. Sold that level. So that at the moment is basically your upside resistance, which is 4R. So if we do break long and I do re-hedge long, that's the first point I'm going to look at for potentially trying to exit that. And it needs to really be a decent pullback to actually get out of this today. So other than that, if we just sort of do this today, it's just going to be a locked in loss today, unfortunately. But we've got the US session to get it back. But at the moment, it can't actually make up its mind whether it wants to do anything, because we haven't actually moved literally in the last 2 minutes. 20 seconds left on this candle. But it is looking bearish at the minute, isn't it? So fingers crossed. The Dow is looking very bearish as well at the minute. Nice long wicks projecting that level. So obviously the Dow's not in control today, the DAX is, but we've just gapped as well. Look, there's no liquidity. We've just dropped, totally dropped liquidity. Look, which gapped. Did there as well. Look, so there's no volume again in the market. There's a few actually I haven't noticed. Really no volume today. Normally you would open your candle where you close your candle. We're getting little gaps all over the place. So there's same as yesterday, isn't it? We had exactly the same yesterday. Ooh, where's yesterday morning gone? Here. We had this, didn't we, for a good half an hour. We literally, it was just like pulling teeth, wouldn't it? And eventually I got out and went, I had enough. And then we literally did that for the whole day. Didn't go anywhere, did we? So it's looking very much like yesterday at the moment. That was your move. And then obviously New York opened. So not fun this morning. Do you always exit DAX trades by end of session? Yep. You can leave it if you want to. I mean, there's no right or wrong. My analysis has shown that most of the time you're better off getting out at, if you're hedged, basically. If you're not hedged, it doesn't matter. If you're hedged, though, the majority of the time, it's better to get out before the New York Open. But again, it's a 50-50 shot, isn't it? Going to hedge on this. So I'm just going to take 2.5K loss this morning. So basically, if you get out of the hedge just before the New York Open, it's a 50-50 shot here. New York will either continue the move or retrace the move. So the odds are still 50-50. If you get out just before the New York Open, you could exit your hedge nicely or not. But if you're hedged, all that's going to happen is the price is going to move with your hedge locked in. That isn't going to change that amount of money that is lost. So you can try and find an exit during New York if you want to. But for me, I'd rather just exit Frankfurt and go, that trade this morning didn't work. I've got 3 more opportunities to make money this afternoon. So I could try and manage that position as well as the 3 in the afternoon. But There's no advantage to doing it. Some days there is. Some days, if you look at it, I mean, if you look at this today on the DAX, let's say we lock this hedge in and we end up sitting somewhere around here at the New York Open. I'm still in the same position as I was this morning shall I get out of my trade here or not? The danger is if I say, right, shall I get out of my trade now just before the New York Open? If the New York Open continues to move long, it's going to move up there very fast and very aggressively, which means if I've exited my longs there, my short goes into very, very big drawdown with one massive candle at the open, which means that is a bigger loss, much, much bigger loss. If it's not working, take it on the chin. Yeah, this is not a strategy that is magic and works all the time. This is a strategy like any other. It loses money. Yeah, you're going to have lost days, lost sessions, lost mornings, lost afternoons. You're going to have a loss of everything. You're going to lose. Because if it worked every time, I wouldn't be sharing it with anybody, would I? Nobody would. If anybody had a strategy that worked all the time, they'd keep it to themselves. There isn't one. So basically, you're going to have to take a loss. It's how much loss you take, which is the question. People find it hard to let go of loss. Whereas for me, 2.5% loss is 2.5% loss. Look at the P&L. If you look at it on the grand scheme of things, it's just a day like any other. There's a 2.5 there. There's a 2.5 win there. There's a 1.5 win there. So far, it's a 0.3. Yeah, gain today. If it turns into a negative 2.5 today, fine. It's just cancelled that day out, hasn't it? What are we still up? If you get 3 days out of 5 that win and you limit your losses to a reasonable amount, you're going to come out on top. And we know that a lot of the time you're going to get nice clean breaks, which are going to make you money. So you just got to take the losses. And that's what the hedge is about. But, you know, if this locks in as a hedge, which it looks like it's going to, and I see us get there and I see a wick form, and then I see us push up and stop and a bearish engulfing form, and then I see an inside bar which breaks to the upside and then forms a wick. Yeah. What is that telling me? That level is holding. So I will probably exit there and go, right, let's have another crack at it. That looks like a good risk for me to lock in another 1% hedge and go with maybe a 3.5% loss on the day, because that looks bloody good. Very strong support resistance area. So if that locks in, gets there, and we've got half an hour, 3/4 an hour before the New York Open, I'll take it. If we're still sitting around here doing this, loss. But these are the decisions you have to make yourself. You can't make these decisions. The EA can't make these decisions. This is a trading decision. It's discretionary. All trading is discretionary. You can have as much mechanical execution as you like, but at the end of the day, mechanical execution is exactly that. It has no idea of potentially what you can see happening. That's what I see happening. If it blows through that level and it sits up there and starts doing that, that trade idea is invalid. What do I do next? Don't know. I don't know what to do, so I'm going to lose money. Yeah, that's the thought process you've got to go through. Every time you're in a trade and every time you take a trade, it's exactly the same as position trading. The first thing you do when you press that button is go, where are we going? Forget about stop losses, forget about everything else. If I'm right, where am I getting out of my trade? Everybody's trying to make a 3R, 4R, 5R because that's what the courses tell you need to do. If your risk is that, your reward needs to be this. No, your reward will be where the reward is. The reward at the moment to the upside is there because that is the obvious spot that the sellers are going to enter because that's what's happened before. So where is your reward to the upside today? 3.5R. Yeah. Not 4R, not 3R, not 5R, 3.5. If the market is going to play support resistance as it does every day, 3.5R is your upside target today. Failing that, it's yesterday's high, which is just shy of ADR. It's not ADR. It's not 5.5R. It's ADR because that is where the sellers started to sell. That is where the sellers started to sell. They are either going to start to sell there or they're not. But those are the decisions you've got to make. I can teach an EA to try and identify these, but it's never going to identify it perfectly. So everything mechanical is just that. It's just pure mechanics, isn't it? Whereas as a human being, you can see things like this a lot clearer. If we get to here and my target is there and I see a whacking great shooting star go in, I'll probably make a decision that, yeah, they're selling a little bit earlier because they did that last time. And that's only at 3R, not 4R. See what I mean? It's you've got to have that human interaction with any strategy, with any EA, because it doesn't know that stuff. You do. Well, you will do, obviously, if you don't already, because you'll see it play out every day. I'm looking at this now, this is looking pretty good now. S&P's rejecting, Dow's rejecting, DAX is rejecting. So hold on to it. Again, decisions, when you see all this bearish price action coming in, should I lock my hedge in above the high? That's probably a better thing to do today, isn't it? That's going to cost me about an extra $700 to do that. But that's my decision because it's more logical. So I'm being driven now by logic, not by finances. 2.5K, 3.2K. Not a lot in the grand scheme of things, where we're seeing US markets starting to look like they might sell off. So let's give it a bit more wiggle room because it can't decide. It's just decisions. Your job is to manage your risk. With position trading, it's the same thing, isn't it? When you get into a trade like I am with oil at the moment, yeah, need a line in the sand to get out of this. Still going above that hourly. So basically, it's the hourly reversal that I'm taking. So the reason I'm picking ADR is not just out of the air. It's because that is where those buyers started to buy. Yeah. When we got down there, they added to those orders. When they got down there, they added to those orders. Yeah. They overshot it a little bit and added more position sizing there. And then it came down and they added again. Why am I picking this area as the zone where I'm happy for price to move to as my line in the sand? Because that was the line in the sand before. The only thing you have as a trader is the ability to look left and see what's happened in the past, because you can't tell what's going to happen in the future. No one can. You can only look at where the banks and institutions moved from before. They're creatures of habit. They will do the same thing over and over again. And everybody in the banks and institutions will be seeing that they bought last time from 77.5. That's what they'll be looking at. There'll be orders in at 77.5 to buy because there was before. And there'll be orders in at 77.5 to buy from everybody that's shorting at the moment because they need to get out their shorts and make some money. So where will they get out? Where they think everybody else is going to get out. Because if it happens, they want to get out fast so they make more money. All the market does, support, resistance, up, down, up, down. Didn't sell from there for any other reason than that's where they bought it from. And when they ran out of buyers and the sellers started taking control, everybody that was long here flipped short. So now what are they doing? The opposite. Banks are always in the market. Yeah, you don't go, I'm going to go long on oil. Oh, I'm going to sit out of it for 6 weeks. You're always in oil, right? You're either in long or you're in short. Yeah, support, resistance. The way it works. We've got a slight difference of opinion on the US markets at the moment. DAX is the only one not paying attention to what everybody else is doing. Nice wicks, though. So, got half a chance, I think, of getting out of this today, but we'll see. Certainly not enough buyers in the market to drive it at the moment, is there? So we'll see where we go. Morning, Tammy. Thought feeder out of the DAX, pulling back from gap fill, then made a few dollars trading the internal triangle bounces. Look at you. See you in the afternoon for more jittery index fun. Yeah, probably. Hopefully not. Hopefully we just get a lovely clean break this afternoon. We deserve it after yesterday. If you look at the US indices yesterday, I mean, they literally didn't go anywhere yesterday, did they? That was, I mean, look at Friday and look at yesterday. The market's like, holy crap, we've run out of money. So, how's my Payback FX doing? It's not, Harold. Do you know why? You can only join Payback FX if you follow their affiliate link to sign up for the account. So you press the button in Payback FX and it goes, nope. And then you press it again, it goes, nope. And then when you look at their help and support, it's like, okay, go and sign up with another account at Forex and then press the button and that one will work. So basically, it looks like you didn't follow our affiliate link. We're not going to get a kickback from it. So therefore, there's no payback. That's basically how Payback FX works. So I'm not giving them affiliate revenue. But it's not working at all. I'm not getting paid back anything because I'd need to set up a new account following their affiliate link, and I can't be asked. So it's just an affiliate, basically, at the end of the day, which I didn't realize, but it is. Welcome aboard, Zunair. Thanks for subscribing. We are totally in a go slow, aren't we? A minute. Let's do this morning. I can't make my mind up this morning at all because there's no signal in any shape or form. We are just contracting, but we're contracting higher and higher all the time. This is getting more like an ascending wedge, which is bullish. I've got the opportunity to get out of 1.5% loss. I'm going to lock my hedge in tighter. I'd rather take less loss on this because I just don't like the look of it at the moment. So I'm re-hedging above this high. So this is that high, excluding that little wick there, which popped up the top and they sold out of. Yeah. So if we break basically above that wick, I'll lock it in at 2%-ish. This last 20 minutes is that. And look at the size of the bodies. This is just pure algorithmic trading. There are no speculative traders in the market today at all. So you're at the will of the bots today. So it's either going to go one way or the other when somebody or some bot puts some big order in, and then we might well start some kind of short-term move. But at the minute, it's just not getting anywhere. So I'm just locking less and less loss in because if it pops and it goes quick, I just want to make sure I'm not getting on the wrong side of a large upside move. So that's my play today. It's to try and get out of this. If we get a nice big down candle, I'll probably leave it and see if I can get a nice profit out of it. But at the moment, it's just not going anywhere, is it? So I'll leave it there. I'll pop in Telegram what I'm going to do with it and just keep an eye on it basically this morning. But not going anywhere. So a bit of a crappy one, isn't it? So I'll be back this afternoon, same time, 2:20 for the New York session. No news today. So FX movement should be just the same as we've had this morning, really. It's all about the Aussie today. And potentially continuing those Australian moves. New Zealand dollar Swiss is getting a bit close. Another 0.5%. We're at ADR now. So I'll tell you what I'm going to do with this New Zealand Swiss. I'm going to trail it in at 90 pips. Whoops. There you go. New Zealand to Swiss ADR. So we're basically ADR. So we might find some resistance now. We've got propulsion gap coming up as well out of that accumulation, which they retested and rebought. So there's a potential that we're going to rebuy that level. So I'm just going to trail that candle height. So if we get an inside bar in the next hour, I'm still in. If the inside bar then turns into an inside bar break and continuation, I'll get trailed along with it, and I'll get basically taken out of that one with whatever it gives me. So guaranteeing to lock in 0.4, 392, yeah. So 0.4% locked in on New Zealand dollar Swiss. I've got to pay for oil at the moment. So this is the annoying thing. If you look at my portfolio so far this month, 7.6%, and about 2% of that is oil. So I'm sitting on roughly 5.5%. About a week in, which is on target for a 20% month, which is fine. 5.3% in drawdown out of my 8%. So I'm actually sitting in just under 3% of drawdown on all FX. That is what is screwing my month up. So I've made 2.5%, but I'm actually about 2.5% in drawdown on the entire oil position at the moment because of that, plus swaps. So I just want out of oil, because it's screwing up my FX results, which is how I make the money. So not happy with oil at the moment. But if I can get this aggressive drawdown control position on today and make some headway back up into here, I can break even, stop that, and try and get out with a nice little break even. DAX is coming down nicely. So $600 at the minute. Might get out of this morning. Euro yen, or did you do it already? Haven't done euro yen. Haven't done any yen pairs. Nice M pattern reversal. Just about to get a reversal on the hourly there. Multi-day M off of yesterday's high. I don't know with the yen at the moment, because it's being driven by the US dollar yen. It's very difficult to tell what to do with any yen pair, but euro yen was extended on the hourly yesterday, so you had a potential reversal alert in there yesterday on M5 for the H1 M5 mean reversion off of last month's high. So looks like a good short at the moment. That propulsion gap down there is orphaned at the minute, so there's a good chance we'll get a big strong push back down into there and stay in a range. I think what we're going to see with the yen moving forward is it just basically weakening, strengthening, weakening, strengthening, weakening, strengthening, because that US dollar at the moment isn't likely to power up massively or devalue massively. So as long as there's no real push from the US dollar yen above that 152 level, I see probably most yens doing something like that, which isn't good unless you can get out of it on the move. So the moves have got to be big enough for you to exit them. Otherwise, if you just get into them and you get stuck and you have to add a second position and then you get stuck and it does that, you're just going to pay so much money on swaps. It's just not worth holding. At the moment, there's no normal structure. So I'm just leaving the yens alone at the minute. I'm staying clear and trading everything else. Because everything else is moving. Everything else has got fundamentals driving it. The problem with the yen is obviously the negative interest rate. Because the yen is not affected by interest rates, it's just permanently devalued. And if it gets devalued to the extent where the US dollar yen becomes uneconomical, they just stop it being devalued. And then it goes like that. Boom. And that's what we're seeing at the moment, isn't it? And that's what we've been seeing on the US dollar yen for the last few weeks. Out of the DAX over there, I did a slightly different play on it here. So this account basically has come out with a profit of 1.25% on that DAX move. So there's the hedge complete on that one. And here, I'm out of some of it. The automated part has just got out. So this is the automated part of the EA getting out. $63. Break even. I'll take that. So I'm just going to close that off the longs. There we go. So no money on the DAX this morning. And flat. A green day is better than a red day. There we go. Right. I will leave you there. Apart from Patrick's got a question. Everyone, professionals or those who call themselves professionals, always talk about price action. What is price action in your interpretation? So price action is just candlesticks. So price movement makes more sense than price action. Price action's cooler, but it's price movement. That's all it is. So a candlestick. So this is bearish price action. Yeah, that's really bearish price action. That's bullish price action. Yeah, that's a really bullish price action run. All it is movement. So a lot of people you'll hear trade bare naked charts. Yeah. So price action traders will always say they don't use indicators, which is fine. But price action traders basically trade what price is doing. So what is price doing at the moment? So it's just part of a momentum movement. So here, the price action, there's a strategy that's taught on Forex Factory by a guy called Strat, called PASR, price action at support and resistance. And that is he was one of my biggest influential mentors, Strat. He taught me about price action. And basically price action is just what price does at a point. Yeah. So we've got a previous resistance there. So when we got close to that previous selling point, the price action shifted from bullish to bearish. And you can tell that by a candlestick drawing something like a shooting star or a bearish engulfing or an inside bar that breaks short or a 3-bar reversal. Yeah. So that's price action. And it's basically what price does, but couple it with a level that makes logical sense for it to do that thing. So if you see in the middle of a bull run a shooting star, that doesn't mean anything. That shooting star appears in the middle of a run. All it is for that particular time period, 5 minutes, 15 minutes, 1 hour, 4 hour, day, week, month, year, whatever that candlestick is representing on your chart, it just means that there weren't quite as many buyers in the market at that particular time than there were sellers. Doesn't mean it's not going to continue in that direction because it's on its way somewhere. Where it usually goes to is a place it's been to before, because that is where the banks did not want price to go above for usually a fundamental reason. So you look for price action, candlestick patterns, at previous areas of support and resistance. If they work, brilliant. They shouldn't invalidate the high. So where everybody goes wrong is they go, when we get to this area here, I'm going to sell it and I'm going to put my stop above that high. Whoops, it worked. But you didn't because you got stopped out, because you used a stop loss. What you should be doing is what the banks are doing and is going, okay, when we get to that level, I'm going to short it. If it works out, brilliant. If it doesn't work out, I'm going to short it at the next level of price action. And then I'll get out on that one by moving your price, which is what position trading is. So position trading revolves around price action at support and resistance using market structure. That's all it is. It's a fancy way of saying the sellers have taken control. So this is a good price action pattern here. Get off my screen, orange block. So this candlestick here. Yeah. So we pushed up, bullish price action. We then pushed up, bullish price action. So again, price action, again, market structure, highs and lows. Yeah. Outside bar, inside bar, break to the upside. So that is actually bullish price action, but obviously you're doing it at resistance. So That's all it is. Just a fancy way of saying bulls or bears in control. Right, so flat on the DAX. My focus today is just oil. New Zealand dollar Swiss locked in. Aussie dollar Swiss. Close to break even. I might close that Aussie Swiss as well, actually, when we get there. I don't know, I might leave it. I'll have a look at that this afternoon. But yeah, oil is my focus this morning. I'm just going to be monitoring this over here, basically, and looking for an aggressive entry. There's no support resistance until we get down to that level. So I will take any bull price action I get. But ideally, what I'd like to see is it go further into drawdown and actually then move from there, because there's a reason. So that's what I'm hoping to do. We get a little bit more bearish price action. Looks like it's working at the moment. So a little bit more bearish price action down for roughly half an ADR. So another half an ADR down. And then I will just basically take the next reversal alert 15-minute time frame long. And hope that that is where we start to get some kind of traction. Other than that, load of rubbish. Right, anyway, I will leave that there. Anything you need, let me know. I'll be in the Telegram group. I'll be back this afternoon at 2:20 for the New York session. Tomorrow morning, 7:50 for Frankfurt, as usual. And then we'll see how everything is moving. But a bit of a crappy session on the DAX today. Lucky to get out of it with a break even, I think. But I'll take it. All right, so have a good day. I will be back this afternoon. See you then, if not tomorrow morning. Have a good one.